The pound slumped to an 11-month low following rising concerns of a no-deal scenario on Brexit. International investors are pulling away from the British currency as the March 2019 deadline draws closer. Joining me now is Mike Ingram, Chief Market Strategist at WHIreland. Mike, thanks for coming in.
Good morning.
Let's start with your outlook for sterling. Do you think there's further downside from this 11-month low?
Doesn't surprise me because the whole Brexit outlook looks decidedly dicey. I'm not sure where Liam Fox, the Trade Secretary, got his 60% probability of a no-deal Brexit from, but it's certainly not an immaterial chance that we're going to crash out, and that clearly there's no reason why we wouldn't see sterling sort of grace the lows that we saw in October 2016 or even beyond. If you look at the market, how the market is positioned in and around that, quite interesting because we had since the referendum up until the end of last year generally varying degrees of speculative short interest out there. Going into this year, the idea was that actually the negotiations were heading in the right direction. The market tried to build up spec longs. Those peaked in April this year. And then as the mood started to change, or at least the perception of it changed, we've seen those pared back, reached pretty much zero mid-June. This is when you started to see weakness in the spot price of sterling, particularly on cable. And then, since then, we've now got the biggest, I think, spec short on the basis of the CFTC numbers I saw at the end of last week, the biggest net short position in sterling since September of last year. So it's 11-month high. And you look at the risk reversals, how the options market is skewed. If you look at the 3-month horizon, which takes us beyond this October summit where everything's supposed to be tied up, they're saying that we'd much rather buy puts than calls. So the markets itself is indicating short position, rather buy protection, that there's probably a bit more downside from sterling on where we are right now.
So if you and the market are relatively pessimistic on the pound, does that translate into optimism towards the FTSE?
Not necessarily, because on the flip side of that, if you're buying, you're going to say, well, hang on, if I'm buying, say, dollar earnings, if I'm buying the miners, buying oil companies, then the question is oil going to go up? Are metals going to go up? Now, what we've seen certainly on the metals is since, I think, mid-June, we've seen a very, very substantial decline in industrial metal prices, and again, this is very much tied up with the global trade worries that are very much out there at the moment.
Dr. Copper.
Exactly, Dr. Copper. Maybe the outlook for oil is somewhat brighter because obviously those same trade sanctions to some extent may deliver an oil supply shock in and around Iran. So maybe the oil outlook is looking slightly better. But again, reflexively, you just go, oh, well, sterling weakness, I'll load up on some of those sort of exporters. When you scratch the surface, actually the case for that might not be very solid. And then of course, if we're talking about a hard Brexit, and this is something that the Bank of England actually highlighted in its MPC last Thursday, if the risk premium on UK assets overall is going up, then even if you think you've got a currency hedge, it might only prove to be a partial hedge because again the risk premium that investors want is being applied to pretty much everything that's traded on the FTSE. And
when it comes to the gilt market, do you expect that the gilt curve will continue to flatten like we've been seeing last month?
Yeah, I think that's quite likely. I mean, and in as much as I think that a lot of the inflationary pressures that the Bank of England are seeing out there are somewhat non-existent. And actually, the market to some extent hinted that last week's rate rise might actually be a policy error. You did actually see some of the inflation break-evens tail off somewhat. So do you think that rate rise might be rolled back later in the year? I think it's entirely possible. In fact, Mark Carney, on Friday last week on BBC Radio, I mean, he sort of rather Delphically said, well, rates could stay the same or go somewhat higher, or there are some certain scenarios, and we all know what those are, where rates might be cut again. So yes, I mean, if we have a hard Brexit, it's not unlikely we're going to have a rerun of the August 2016 rate cut.
And as we move towards the end of the year, what sectors do you think could potentially outperform in the UK as we head towards December?
Well, unfortunately, it all hinges on what you judge to be the Brexit outcome. I mean, the one thing I would say is that, from my perspective, and nothing which has happened in the last few months has disabused me of this notion. In fact, it's reinforced it. Is that the outcome is pretty much binary. It's either a hard Brexit or a no Brexit. How we get to either point might be a sort of a function of how the politics play out, and obviously there is still some momentum for a second referendum, for instance. There's a general feeling that Theresa May has not handled this well, and it would all turn on that. So I mean, to say, it sounds banal, but obviously if you get a sort of effectively no Brexit, then you're going to see macroeconomic proxies like banks do well. On the other hand, if you don't get any Brexit at all, banks are probably going to be first in the firing line. So and perhaps some companies such as oils are going to be somewhat defensive. The problem is at the moment the market seems to be taking a somewhat directional view in it and saying, well, no, this is going to be a very hard Brexit. They're starting to price in the equity market accordingly, and I'm thinking actually it's actually rather more balanced like that, but the problem is because the polls are so far apart, the only thing I can bet on, I would like to bet on, is higher volatility, and that's something actually which isn't being factored into sterling, for instance, and it's not being really factored into the UK equity market either. So
market gyration's the only thing we can count on
right now.
Yeah,
it's not going to be a quiet end to the year by the looks of it.
All right, Mike. Thanks so much for your time. That was Mike Ingram, Chief Market Strategist at WHIreland. Thanks so much for watching IGTV. I'm Victoria Scholar, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis and expert commentary.